Good morning. Thanks so much for tuning in to the trade setup right here on BQ Prime. I'm Neeraj Shah. Let's take stock of the global news flow. The globe is well behaved for the last couple of days. Let's try and see what the markets could do. First, in terms of news, ECB has said that it will stay the course on rate hikes. Doubt it is worrying too many people because the quantums might start coming down. Peak rates are behind us. I doubt inflation and rate hikes are a worry as yet. If anything, the joker in the pack is what happens to energy. And I think, as Chris Wood pointed out in his note today, if indeed the US and the German decision to send more tanks means that the Russian-Ukraine conflict could continue, and then that is the energy prices is the bigger worry. Maybe that lead to inflation, of course. US has targeted Chinese companies in broader Russia sanctions push. So that issue continues. Gold steadies near the 9-month peak with spotlight on the US data, and smartphone shipments plunged to lowest since 2013, their largest ever decline. Now, this is the most interesting data point really to my mind, and as to what happens to what's happening to consumers per se. We're seeing consumption faltering across the world, and it is showing in something that we thought had almost inelastic demand, which is smartphones. Even that is coming under pressure. Very interesting. Nevertheless, what did the US markets do? They had a good overnight session. Remember, day before we were shut yesterday. So Wednesday's trade in the US was flattish yesterday, up again. But 5 days on a trot, now the US markets have had a positive move. The futures are mildly lower, but I doubt that is worrying the street too much. The other cues, the dollar index flattish, VIX has come off even further. The 10-year yield went back about 3.51 on the GDP print, looking okay in the US. So keep that at the back of your mind. The SGX Nifty indicates a start which is above 18,000. Remember, been saying for a while now, and this week too we'll have that wedge between 18,200 to 17,800. We went down to 17,891 odd on the Nifty. We bouncing back again. It will not be a 0.38% uptick simply because you got to factor in that if we started above 18,000, that's about 130 odd points or thereabouts. So maybe slight change here and there. But that consolidation phase will continue for the 6th straight week. And I would reckon ahead of the budget, ahead of the Fed policy, and ahead of the RBI's own policy slated to happen post-budget, we'd probably not have the markets make too many moves, at least in India, independent of what the globe does. So what's the trade setup therefore for the day? I think the world markets stable while India on holiday, and therefore the consolidation phase to continue. Auto is turning to be the sector to watch out for this quarter, despite the slump in staples consumption. You've seen a big pullback in staples consumption. I think Patanjali food is yet another example, and we'll come to that in a moment, the food segment performance to drive home that point. But auto is really, I mean, you look at what Sona Comstar did, you look at what I think even Bajaj Auto's performance is putting up, not just Tata Motors, and that tells you a story or two about really what's happening to autos in this quarter. Extremely strong showing by and large for autos. Maruti did well, TVS did okay. So you know that autos are in the thick lane. I'm watching out for the commentary from the chemical companies to determine whether the result-led corrections are buying opportunities or not. You know that this quarter is going to be a painful one for chemicals. In all likelihood, if the global pain continues, even the next one. But our chemical companies saying that supply chains are returning to normal, and therefore the quarters ahead could see a decent outlook, because that's the thing to focus on. Keep in mind that very soon you will hit a period of favorable base for some of the chemical companies as well. The period of pain is probably the place where you get the stocks at the best prices. So focus on the commentary when it comes to the chemical companies, not just on the performance. So that is to be kept in mind. Lastly, I think a lot of people would be asking about the performance of the Adani Group stocks. I have no idea per se. I have standard disclaimer. Of course, Adani Group is in the process of acquiring 49% stake in Quintillion Business Media. But that notwithstanding, the limited point around the price performance of some of these stocks, because so many people own them, I think it's difficult to pin down the pullback timing on the possibilities of these Adani Group stocks pulling back. But I think the market being fair today, you look at the brokerage reactions that have come in from Indian brokerages, including Kotak Securities and some others, they're all turned constructive after the fall on Adani Ports, for example. Adani Enterprises had a fairly decent anchor FPO book as well. One would suspect that maybe you see some bit of that happening today, but I may be bad at this. And again, I want to lay out the standard disclaimer, not that it impacts our how we talk about it on Trade Setup, but yeah, the Adani Group is in the process of acquiring 14% stake in Quintil Business Media. So you should know that if you want to take my commentary with a pinch of salt. Results today, Bajaj Finance, there's Aditya Birla Sun Life, AMC, then there's AI Engineering, Glenmark Life Sciences, Sterlite Tech, and Vedanta. All of these, some of these important. Bajaj Finance, most certainly, the most important NBFC result to be tracking. What are the stocks to watch in the session today? It's a long list, so let me quickly get to that. First up, Dr. Reddy's. The Q3 numbers, revenues up 27% at 6,790 crores. The Bloomberg estimate was 6,096, much better than estimated. EBITDA 1,952, the estimates were 1,547. EBITDA margin at 28.7, the estimates were 25.4. And net profit up 75% at 1244. The estimates were 908. They've done remarkably well, Dr. Reddy's. Remember, it was strong due to Revlimid sales in the US. The Q3 had about $130 million of Revlimid, generic Revlimid sales in line with Q2. Ex-Revlimid, the business remains very, very muted. In fact, an analysis suggests that the EBITDA margin is well below 20% level, excluding Revlimid, which is, of course, well below the FY22's performance of 21.5%. So if Revlimid wasn't there, it would have been a terrible performance for Dr. Reddy's. The point is, Revlimid is there, and it is showing in the way the performance is holding out for this stock. I'm trying to get the brokerage performances on, or brokerage reactions on Dr. Reddy's. So Morgan Stanley's overweight, target price 5099. Macquarie's outperformed target price of 4915. They've raised FY23 estimates as well, but largely maintain FY24-25. So you got to keep that in mind, that most brokerages are constructive on Dr. Reddy's. Never mind the fact that it's Revlimid which is driving it. But yes, does it mean that FY24-25 will also be as strong? Remains to be seen. Tata Motors is the second one. Extremely strong showing. Revenues up 23%, 88,488. Expectations were 83,426. EBITDA 10,820. Estimates were much lower. EBITDA margin, profits. I mean, obviously the analyst community got it really, really wrong when it comes to Tata Motors. Extremely buoyant show by the big boy, even on the EBITDA margin front. So good showing there by Tata Motors, and you would suspect that CVs and JLR doing well. China opening up, the commentary around JLR should be constructive as well going ahead. Extremely strong showing. And most brokerages are bullish, by the way, viewers. Dr. Jeffries, for example, has raised the target price to 565. Nomura is a buy with a target price of 508. There's just optimism around Tata Motors in a big way. So do watch out for this one. I saw Motilal Oswal and some others too talking very constructively about Tata Motors. So it's a stock that you should keep in mind today. Autos as a pocket should be kept in mind, because it's not just Tata Motors. Like I said, Bajaj Auto has a lot of strong commentary. CLSA has raised the target price to 4619, Jeffries to 4300, Morgan Stanley 4449. They have a contrarian overweight. They say on Bajaj Auto. Let me tell you, it's not contrarian, because even JP Morgan has upgraded the stock to an overweight with the target price of 4400. Very strong bullish commentary around Bajaj Auto as well, should be kept in mind. Tata ELXSI, I think it's important from two perspectives. One, its own performance. So revenue up 7.2% at 817 crores. EBITDA margins 30.19, up strongly QOQ. Overall quarterly revenue crosses the $100 million for the first time. Net profit at 240 crores. So net, I thought Tata ELXSI did okay. The pickle is, and let me get you what the pickle is. There is a note which says about how there's a small problem with Tata ELXSI, which is that in some of the factions or in some of the performances, except for the auto division, Tata ELXSI hasn't really had a really strong performance. Morgan Stanley, for example, has an underweight on Tata ELXSI with a target price of 5,800. They're saying that the EPD business slowed for the fifth straight quarter, affected by furloughs and project deferments. Normalization costs and ESOP costs should help margin expectations in check, but the commentary on outlook is balanced. Autos is better than healthcare, which is better than media. Now you'll see, the thing is, viewers, the three ER&D companies, which is KPIT, Tata ELXSI, and LTTS. LTTS had a very weak performance. Tata ELXSI is a much better performance, and I'm actually, I mean, it's an expensive stock, but they've done really well. But their commentary on autos is the best, and which leads me to believe that actually you might see amongst the three R&D companies, the best performance coming in maybe from KPIT. Those results are on the budget day, so you've got to keep that in mind. LTTS, Tata ELXSI, KPIT, much better showing than some of the IT companies. I thought the performance of Tata ELXSI is good, by the way, but Morgan Stanley analyst, of course, tracks it very closely, and they're saying that the EPD business has slowed for the fifth straight quarter, which is probably not great. They have an underweight rating, by the way, with the target price of 5,800. Torrent Pharma, the numbers looked okay. Revenues were up 18%, largely in line. EBITDA 724, largely in line. EBITDA margin 29.1, largely in line as well. Net profit up 14%, lower than the Bloomberg estimate. But you would argue that the numbers seem largely in line with estimates, which is actually not a bad thing. Pharma has had a slightly iffy quarter this time around, but this one has turned out okay. And I think brokers also have a hold rating on this one. They believe US performance will remain tepid. So not too much of a trading opportunity here. See it, I thought was interesting, and Amara Raja was interesting. So see it, 2727 Bloomberg estimates were 3,000 crores. EBITDA at 181. The Bloomberg estimates were 296, so that is much lower. But the margins are flat for CEAT, which is not bad. Net profit at 35 crores. Estimates were 93. The point is, viewers, that margins for CEAT have remained flat this quarter. And with the fall in crude prices and other raw material prices, margins could improve in quarter four. And that is the thing to focus on. Q3 is gone, done, dusted. Could Q4 be better? That is the key point when it comes to CF. So I do think the stock may get maybe a little punished today. Let's wait and watch how it moves ahead. Amara Raja Batteries, revenues up 11%, EBITDA margins at 14.95 versus 12%, PAT up 52% at 221 crores. Like I said, select auto names have done really well. And like I said, consumption isn't. So look at the next two names, and that will tell you a story about consumption. DIXON, revenues down 21.75%. EBITDA up at about 7.9% at 111 crores. Operating margins also steady at 4.62 versus 3.35. In fact, if this business to pick up operating margins is pretty tough, but they've done that, and which is why the PAT is up 11.88%. But there's a 39% decline, viewers, in the lighting and TVs business, and mobiles revenues fell 3% YOY, 43% QOQ. There's a strong demand decline, as we said in the global roundup as well, that smartphone shipments have declined world over. That's not a great sign. It's showing that some chinks for DIXON. We'll be talking to the management today, of course, at 12. So that's an interesting conversation to log in. And Patanjali Foods as well. If you look at the numbers, revenues were okay, 26% console, but EBITDA down, EBITDA margin down, net profit up just 15%. And the food segment was a big drain. Food segment margin came in at 10% versus 25% QOQ. The company in Q2 had guided that 25% margins are unsustainable, but they had said that they might normalize at 18%. The food segment margin is at 10%. So big bit of a drag for Patanjali Foods as well. You might well see this stock react a little bit. Tata Steel long products, abysmal numbers, and you might well see this stock react a bit. Could it have an impact on Tata Steel as well? I doubt really, because this is a very small fraction of the global business, but you never know. Just that. The Tata Steel long products business has looked very, very wobbly. Net loss at 236 crores was the profit of 103 crores. It was expected to be bad. It's turned in worse, really. Very bad showing. And DLF, again, as a weak showing, really. Macrotech was a weak showing. Revenues down, EBITDA margin comes off a little bit. Net profit off, marginally higher, but broadly the performance looked weak. I think you would see across the board real estate not quite performing well, and there is a problem there. About 6, 7, 8 months ago, 9 months ago, this conversation where the fund manager who said that They're just avoiding real estate simply because the high interest rate scenario will not be constructive. You're seeing sales slowing down. There's a brokerage note today on Macrotech which says that except for, the pre-sales from an average of 20 to 25% until FY23, they expect pre-sales to trickle down to single digits in FY24 and FY25. There's a problem in real estate viewers. Bear that in mind. Before we wrap up, Chris Wood has a recommendation on his model portfolio. Just thought we'll bring it to you. You don't have to follow it, but he says that the investment in SBI will be removed completely and replaced by an investment in SBI Life Insurance with a 6% weighting, while the investment in HDFC Bank will be increased by 1 percentage point by reducing the investment in HDFC Life Insurance. So some bit of tweaking between in the financial portfolio, but SBI completely removed and SBI Life has a 6% weighting. That's quite a stunning change, really, from Chris Wood of Jefferies. Nevertheless, that's the end to the very long trade setup today. Lots of result reactions anticipated. Watch out for autos, might do well. Watch out for ER&D companies, TATA, ELXSI, and KPIT. And watch out for pharma. Dr. Reddy's could do well. Maybe Cipla and Torrent Pharma will not. And certainly consumption like Patanjali, etc., or DIXON might correct. What the Adani Group stocks do is a very difficult thing to predict today. Nirav Sheth of MK joins in at 10 a.m. DIXON Technologies CFO joins in at 12 p.m. And we talk to IGL a bit later on. MD Sanjay Kumar talks to us at 1 p.m. So you might want to tune in for all of these. Thanks for tuning into the trade setup today.